welcome to our second inaugural Faculty Talk series. Today, the faculty is excited to host Dr. Claudia Sant'Anna, an assistant professor in the Division of Resource Economics and Management at West Virginia University. Her research interests focus on strategic decision-making within the fields of agricultural production, agribusiness, and ag finance. Recent projects have addressed willingness to adopt soil health practices, credit access, and biofuel expansion in South America. At WVU, she teaches courses in agribusiness, agricultural finance, and econometrics. She has received research grants from institutions such as the National Institute of Food and Agriculture, the Inter-American, let me minimize my screen here. Thank you. Okay. All right, here we are. The Inter-American Development Bank, the Socially Disadvantaged Farmers and Ranchers Policy Research Center, and the Northeast Sustainable Agriculture Research Education Organization. Dr. Sant'Anna has published a host of peer-reviewed articles and has received a number of awards, such as the Excellence in Review Awards in 2018 from Resources Conservation and Recycling, the University Distinguished Professors Graduate Student Award from Kansas State University, and the CNPq Brazilian National Award for Outstanding Performance and Initiation into Scientific Research. Dr. Sant'Anna earned her PhD from the Department of Agricultural Economics at Kansas State University, and prior to her current position, she was a postdoctoral researcher at the Ohio State University and part of the Farm Income Enhancement Program. Dr. Sant'Anna, we are happy to have you with us. Thank you for joining us today, and we look forward to your talk.
Yes, thank you. Wow, that was that was a lot. Let me just switch. All right. Yes, thank you so much for having me. So I'll be talking today about a study I recently published with some co-authors. Kevin Kim and Irina Denko, looking at the Paycheck Protection Program and trying to understand how that was distributed among farmers in the US. So, what is the relationship between the Paycheck Protection Program, credit access, and limited capital? So limited capital, not having capital, right, can hinder their ability to invest as a company. It can affect farm productivity, and it can ultimately result in a reduced value of the business. And it kind of snowballs, right? So if you don't have capital to start off with, or if you cannot show a lender that you can repay your debt, you may be denied access to credit, or you might face high interest rates. And so that will then make it harder for you to potentially grow your business, invest in it, making it even harder for you in the future to look credit-worthy to your lenders. So recent studies looking at minority-owned businesses and in agriculture and how that relates to lending programs by the government have found mixed results in terms of whether there is discrimination or not. So there's research by Escalante in 2006 that found that there was no difference in the probability of a loan being accepted through the Farm Service Agency once you accounted for whether the business was credit worthy or not. But they do find, there is research finding that there is a difference in the interest rates that are applied, and that in fact we do see non-white farmers facing higher interest rates, and the reason they believe is due to as a credit risk management approach. So it would seem that they have presented some risk, so their businesses may have presented some risk in terms of being able to repay those loans. When we look into the Paycheck Protection Program, there hadn't been, at the time we published this, research looking specifically at distribution of the Paycheck Protection Program in the 2020 and 2021 years, specific to the production agriculture industry. But in a lot of work has looked at the program as a whole, the entirety of it, all the industries, and have found that African American owned companies received less than white owned farms, so about 20% less in terms of PPP loans that were approved, and that the distance to the banks could be an explanation of why they received less. There's also research showing amounts of 50% lower to African American owned business companies with respect to white owned businesses. The difference between these two, these amounts in these two papers probably has to do with how many years were considered. So in the Atkins, they consider the 2020 Paycheck Protection Program information. And so you'll see there's a lot of research that talks about how there was difficulty in reaching everyone. There was like minority farmers or business owners, and how there was a lot of lack of transparency in understanding how the program worked and whether people were eligible for it or not. So within that realm, right, of what has been said in terms of issues in getting credit access and have limitations of capital is an issue there. And within the idea of the Paycheck Protection Program and previous studies finding that there has been differences in how it was distributed depending on the characteristics of the business owner. There's two things that we want to look at in this work that we looked at. So first thing is we're curious as to whether what is found in terms of the whole program, whether this pattern, so this is supposed to be pattern of an equal distribution, if we still see it for production agriculture, or if that is a different beast on its own. And also we're wondering, right, since being credit worthy was not a requirement for the PPP program, after all, to the lender, even though you had to apply through a lender, so through a farm credit system or through a commercial bank or credit union, or what we call non-banks or non-traditional lenders, they weren't supposed to look at your credit because to them it was very low risk. It was a government program, and so they were backing up those loans. So credit worthiness was not an aspect, but we wonder whether limit to capital can still be a factor in whether the person signed up for a PPP loan and was approved. We don't know whether they signed up, but we can see based on the data we have the approval, like who was approved. So that's what we based on our discussions on. So kind of a broad overview of what we'll be talking about. So we'll look at PPP lending among African American farmers. Then we'll use what we find to discuss any linkages that we believe might be between limits to capital and access to credit. So credit here, thinking about this program, access to the program. And and we provide some policy recommendations. So if you can't stick all the way to the end, kind of our punchline is that on average, we don't really find, so on the production agriculture industry, the sector, the PPP approvals made, we don't actually find a difference, a statistically significant difference between African American farmers and white farmers in terms of African American farmers being disadvantaged on average. However, we do find differences in terms of location, and so urban versus rural counties, and in terms of the lenders that they used, which leads us to a discussion about whether having limited capital access prior to the PPP program may have made it hard for some farmers to have access to the program. And so we'll discuss that towards the end. So that we're on the same page, I'll just talk briefly about what was the Paycheck Protection Program. So it was established in March 2020. And basically the aim of it was to provide incentives for small businesses that were impacted by the coronavirus, so that they could keep workers on the payroll. The first time ran from April to August, so about 18 weeks. And then they ran it again in 2021 from January to May, so a little bit longer, about 20 weeks. And the eligibility changed a little bit between the 2 years. So in the first year, the first draw, businesses with 500 or less employees could apply for that. In the second draw, we see that they're considering a bit smaller businesses. So you had to have 300 employees or fewer, and you had to have suffered, or you had to show that you had a reduction in gross revenues between 2019 and 2020. We'll see that you could have used those funds for different purposes. The main purpose was to pay for employees. However, and so if you had 60% or more of that going towards payroll, you could apply for loan forgiveness. But we will see that you could actually apply for you could use it for other purposes as well. Before we go into that, I do want to give you a quick overview of how much went to production agriculture in terms of the Paycheck Protection Program. We see that there was an increase between the 2 years of about 1.4 billion, so 18% of what was given out in loans for production agriculture. We see that there's an increase from about 135,000 to 481,000 applications between the 2 years, so from 2020 to 2021. And we also see that because they decreased the size of the company, we see that in the second year, in the second draw, it actually reached smaller farms. And so what we'll see, if you notice at the table down here, we have a larger number of PPP loans being made in 2021 for production agriculture, but the average size of the loan is much smaller. So we see it reaching smaller companies in 2021, and you'll also see in related paper that in the full program, it also reached more minority-owned businesses in 2021 than it did in 2020. However, much smaller amount in comparison to other sectors went to production agriculture. So we have about 25,000 on average going to production agriculture, so per business that applied, versus how much went to if we consider the full PPP data set. So if we consider all 24 industrial sectors. So In fact, there is a study looking at 2020 data arguing that out of the 37 billion that farmers could have received through the Paycheck Protection Program, only about 6 billion was actually distributed. So a lot of people perhaps didn't know that they were eligible for PPP and didn't apply, or whichever reason, but we see that it wasn't perhaps as used as they could have for production agriculture. So when we open up to look at the different, the farmers by race, so they volunteer this information on when they apply for the loan, you'll see one that we have a large number of people that decided not to answer. They didn't want to answer whether their race. We do also see, like with everything else that we've seen before in the total numbers, there is an increase in both white and African American farmers applying for the Paycheck Protection in 2021. However, if we look at the averages that were applied to each, we see a lower average for African American farms in comparison to white-owned farms. So this is what we're gonna look at and control for and see if whether controlling for other factors, we see if this difference is still statistically significant. So just an overview about the data set that we're using. So this data is available through the Small Business Administration website for loans in 2020 and 2021. We are focusing on the North American Industry Classification System, Code 11. So this is the code for production agriculture. The full data set has about 8 million observations for all different industries in it. And so we just picked out this group to look at the agricultural side of things. Information that you can find on there are the names of the applicants, their address of the business, the amount that was approved. So remember, we only know how much who got approved. We don't know who applied. How many employees they have. This is optional, voluntary information, so they can provide race, ethnicity, and gender. We also can calculate, so we know when the loan was approved, so we can calculate how long it took since the beginning of the program, since the program opened up to when it was approved. And there's the name of the lender that they went through. So one of the limitations, as I mentioned, is the large number of unanswered on race and ethnicity and also gender, because this was voluntary. And so I'll discuss how we deal with that moving forward. Before we do that, we did question ourselves whether the data was representative and whether we could use it to discuss one, production agriculture as an industry, and two, the participation of farmers. And so we looked at two different things to come up with that assessment. The first thing we did is we looked at the distribution of the PPP recipients in terms of race among the ones that we do know information on, and we compared that to what we know from the agricultural census in terms of how the distribution looks like in terms of race race of the farmers, right? And so we found that actually in terms of the PPP loan recipients, there's actually a larger share of African Americans and farmers in that sample in comparison to the share among all the farmers in the US that are reported as African Americans. And then we also looked at the distribution of companies that fall under production agriculture and compared that to the distribution of companies within our sample, so within the PPP program, and they are very similar. I have those tables. If people are interested, they can ask for it at the end. But it is very similar. The big difference with the PPP program is that it's a little bit heavier in terms of the number of crop and livestock producers. But nonetheless, the distribution is pretty close to what it is in terms of the companies under the production agriculture. So we ran an estimation. Our variable that we have as a dependent, so our y, we ran it for two different situations. One was the logarithm of the amount of the loan that was approved, and then we also ran it in terms of how much was paid per employee. So we really just divided the loan amount approved by how many employees the company said they had. Our main variable of interest that we'll be looking at is whether the person that applied declared themselves as African American or not. So, and we control for a couple of things. So when we're running the estimation in terms of the loan amount approved, we control for the number of employees. And then in both cases, we also control for the gender. So here, gender, really, we're looking at male and female genders. Those are the ones that are declared in the data set that they can volunteer. Race, ethnicity here is also in this, in the PPP data. It basically is whether the person declares themselves as Hispanic or not. And we also look at the lending, the type that they use, so the lender that they use, and whether that has any impact on the loan amount received. And we also look at whether they are in the rural or urban county. And then we control for a couple of things. So fixed effects here means that we control in terms of year, county, and industry. There might be things happening in a specific year that pertain to that year that we just control for. And there might be things specific to a county that just belongs to that county and is a little bit different from other counties. And we just control for that through fixed effects. So it's things that are fixed that we just control for using a dummy variable, so a 0-1 variable. So when we run our estimations, we have two, three samples basically. One group of sample we run it on is the people that answered, whether that we have information on their race, right? So it will be a much smaller group that we have that information on. And then we also run it on the entire population, controlling for the unanswered part of our survey. So unanswered in terms of them not volunteering information on their race. And we also run a Mills inverse ratio, similar to what was done in this paper by Atkins, where we want, in order to control for the person not answering, they're not volunteering information on their race. So we construct a probability equation to look at the probability of the person not answering their race based on characteristics in the county, based on shares of within the county of a certain race, of different races, any government payment rate made, farm income. So basically we're creating a probability of the person not answering their race based on factors surrounding them, so surrounding the county that they're in. And then that can correct any bias that can happen due to us not having information on the PPP approval, the individuals that got PPP approved that did not volunteer information about their race. So this then goes back into our main equation, which I showed you before. So this one here, it goes back into it so that we can control for that situation. So I'll go over a couple of interesting things in terms of the data, and then I'll just discuss the findings that we had. So a couple of interesting things with the approval. So remember, these are approval. So how many people were approved? The first part here, we look at through which lenders they went through. And one interesting thing when we look at African-American farmers versus white farmers, is that we see that among African-American farmers, they mainly went through either a commercial bank or a non-traditional lender. So non-traditional lenders were really important, especially in the first draw of the PPP program. They started a little bit later in being able to take on PPP applications. Non-traditional lenders are your non-banks. Examples of that would be, for instance, Cabbage is one. And so basically you would apply online for non-traditional lenders. And so we see that among those that identified as African-American farmers and received PPP loans, most of them either went through a commercial bank or a non-traditional lender. Whereas we see that among white farmers, we have a little bit better distribution in terms of those that went through a credit union or farm credit. We see a larger number of them going through commercial banks and some going through non-traditional lenders. Another interesting thing to look at is the number of people that come from each area. And so we see that among the African-American farmers, a lot of them that got the loan approved were in urban counties, whereas among the white farmers, we have a large number of them in rural counties. When looking at how the income level of the county, so the data separates it between whether the county is identified as a low to moderate income or a non-low to moderate, so a high income county. And we see it's pretty much evenly split in terms of the African-American farmers that received the loan. When we look at the number of employees, here we see that it's close, right? You have on average about 2 employees in the rural areas and about 2 or 3 in the urban areas, whereas in terms of the white farmers, we see larger businesses in urban areas were the ones that received PPP loans. And we also see, if we consider how long it took, so from the start of the program until when they were approved, we see that in general, African-American farmers, irrelevant of which lender they went through. So traditional lenders, we're thinking about our commercial banks and credit union and farm credit system versus our non-banks. So like I said, one example is Cabbage. We see they took a little bit longer to have those loans approved. Now, it could be that they applied later. That's true. However, we do see that they took longer than, for instance, if we're thinking about the traditional lenders, than white farmers. So I wrote out a couple of sentences of the main findings that I would like to discuss. I do have tables available. So if people are interested in actually seeing the results table, just let me know at the end of the presentation and I'm happy to show those. But on average, what we're finding, right, as I mentioned, our results don't really show on average. So among the production agriculture sector, we're not finding a difference in we're not finding that African-American farmers received on average less than white farmers. When we start interacting and controlling for where they're located. So looking at rural versus urban and looking at the lender that they used, now we're seeing differences. And the interesting thing is that we not only see differences between African American farmers and white farmers, but we also see pretty big differences among African American farmers, depending on whether they are in a rural or in an urban area. So that was really a really interesting find that we had. We see that farmers, African American farmers in urban counties received actually a little bit more in PPP loans than white farmers if they were in an urban county. And if we compare white farmers among themselves, we see that the ones in the rural counties received about 3% less than white farmers in urban counties. But when we do the same analysis looking at African American farmers, we actually see that the ones in rural counties received about 11 to 15% less than those in urban counties. And so there we see a larger difference in how much they are receiving. And in comparing African American farmers with white farmers in rural counties, we see that the African American farmers received also about 7 to 9% less. So there is it does indicate some challenges in businesses in rural counties. We also looked at the lenders they used. So just as a reminder, we're looking at 4 different lenders. So whether they used commercial banks, whether they used the farm credit system to apply for a PPP loan, whether they used the credit union or non-traditional lenders. Like I had mentioned, non-traditional lenders are also called non-banks. And so one example of this is Cabbage. And we see what we noticed, right? If you recall our table, we saw that there was a much smaller number. I think only 9 applications were approved through the farm credit system for African American farmers. But in general, what we're seeing for just controlling for the lender, we see that there was a higher amount that was made through the farm credit system. So it would have been interesting to apply through them. And it went mostly to farmers because that was the larger group that applied through them. Now you might be asking yourself, why are we getting these different loan amounts? One of the reasons was, so you have to apply, you have to say how many employees you have and what you plan to use the funds for. And so a lot of the times lenders would come back and tell you you couldn't apply for a certain amount for a specific purpose you had. And so you'd have to then remove that from your loan application. And so that could then be explaining why we're seeing these differences between the different lenders and how they advised the people applying for these different loans. It could also be, the number of people that applied and who applied through which system. So we also see, remember, African American farmers applied mostly through commercial banks and the non-traditional lenders, the non-banks, and we see that the ones that went through commercial banks were able to, in general, that group received about 1,000 more and over 4,000 more from if they applied through non-traditional lenders than the African Americans that applied through the farm credit system. So our thinking when we saw these numbers and how we thought to explain this is we believe what might be really behind this is capital limitations. So the idea is that some research has shown how important it was to have an established borrower-lender relationship to sign up for the PPP. Reason being that a lot of lenders reached out to their customers to say, hey, you can apply for the Paycheck Protection Program. And so having that established relationship helped people learn that they were actually eligible for that program. And so it may likely be that we didn't have as much borrower-lender relationships of African American farmers through the farm credit system. And so having this borrower-lender relationship facilitated the loans approvals. The thing is, though, generally, African American farmers operate on smaller parcels of land. And so what was also found is that smaller companies it was harder to reach them. So businesses, there was unequal treatment from PPP lenders based on the business side. That had to do more with they received a certain the lenders had a fees that they received, and that was based on also on the loan amount that was made through them. So there was an interest in having bigger loan amounts versus smaller. And so there was unequal treatment based on size. And if you think back to the fact that farmers, African American farmers, are operating on these smaller parcels of land, they probably don't have an established relationship with lenders because they perhaps have difficulty in having access to capital. They might be competing with larger farms that have greater economies of scale and access to capital. And so they didn't have this established relationship with lenders ahead of time so that somebody could come and reach out to them and be, hey, you can apply for the Paycheck Protection Program. Why? Well, it has been found that minority farmers are in debt more than others. And if they are farmers that have a higher financial risk, they lend from multiple places, and usually who they're dealing with is commercial banks and non-traditional lenders. So it's likely that the low number we see with the approvals going through the farm credit system could be due to the fact that they do not have this previous relationship with farm credit associations. And so that meant that they didn't even go or think about going through them. And which is something to look at in the future, since in agriculture, they are the #1 lenders in terms of real estate loans, and they compete for first, second place with commercial banks in terms of operational loans, so short-term loans. So we see that the borrower-lender relationship may have played a role in this situation in production agriculture, and the ones that had this relationship had a greater credit access, and so that's why we believe that's why we see that in general there's no gap, right, between what African American farmers received and white farmers. But when we start to break it down in terms of looking at rural, whether they're in the rural or urban locations, now we see that difference because the farmers in rural locations are probably have less credit access than the ones in the urban. Also, you can think about internet access, right? So if they're going through non-traditional lenders and they need access to internet so that they can apply for these programs, you can just think about West Virginia and its issues with internet access. And so it could be that farmers are in a location where they don't have access and can be applying online to these loans. And so it does show the greater challenges faced by African American farms in rural areas in contrast to those in urban areas. It also highlights how there might be a situation where minority farmers have less lenders that they can resort to, even though for the PPP program, credit risk was not supposed to be a factor there. So it seems that this earlier established relationships could explain why we're seeing these differences between depending on which lender you're using. So kind of policy recommendations that we have given what we studied is one is carefully monitor the distribution of PPP in the areas and perhaps implement some refined approaches to help those in need of financial assistance. They could improve in the future and other similar programs, improve participation by providing technical assistance, target advertising to a specific group that they would like to reach. They can keep allowing non-traditional lenders so that it reduces to be a group that they can apply through. And so that could reduce the challenges in accessing the program. One thing to note here is that there has been some issues with these non-banks. So Cabbage has declared bankruptcy. And so there's been also a lot of talk and discussion about fraud in the Paycheck Protection Program, some of it linked to these non-banks. And so there is also some issues with that. Also, it is important to connect underbanked rural areas with capital and capacity building resources, and also to account for existing inequalities such as an existing limited access to capital when designing public programs. So I thank you for your attention, and let me know if you have any questions.
Dr. Sant'Anna, thank you so much for such an informative presentation. I appreciate your research. And what I would like to do at this time is encourage those who are watching to, if you want to ask a question, either turn on your camera and raise your hand so we could see you, or drop questions in the chat. We have also put into the chat a link that we ask you to provide feedback to our speaker about their presentation, and that could be things that are takeaways for you, things you may want to know more about. I'm going to stop screen sharing at this time and allow people to drop in some questions, and we'll have a continuing discussion. Okay. Does anyone have any questions for Dr. Sant'Anna?
Yeah, I raised my hand, so I have a question.
Thank you. Oh, Alan, I couldn't see, sorry.
My name's Alan Collins. I work with Dr. Sant'Anna in Division of Resource Economics and Management. So Dr. Sant'Anna, you looked at the loans. There's also the forgiveness aspect. Are you going to follow through and take a look at that aspect of this particular program?
Yes, we plan to, yes, because there is also talks about how it's also not being approved. There's inequality in how it's being approved as well. I've heard anecdotal evidence of it.
Mm-hmm.
I'm going to do one more follow-up question that's a little different. So it was voluntary to answer these ethnicity questions. And a lot of people decided to not answer these questions. Do you think it should be mandatory to answer these questions, since this is a publicly sponsored program? This is federal government money that has sponsored this program.
That's a tricky question. Yeah, I rather not comment on that one. It would be great if it was mandatory. It would make our lives a lot easier, but I'm sure it infringes other rights there. So I won't comment any further on that one.
Well, I'd like to comment on that because it's sort of interesting to me. I think a lot about the taxonomy of race and how people think about that. And a lot of times there are people who are disadvantaged who think that they may be further disadvantaged by indicating it. So some of the interventions that you talked about, or policy recommendations, I should say, made me think about educational programs that could be designed to further educate African-American farmers about some of the inherent value in doing it, or farmers in general too, just to sort of help them have better insights about it. One of the things that struck me was this, the way you underscored the borrower-lender relationship piece. And I'm not quite sure how we begin to resolve something like that, right? Because that is deeply rooted and systemic. And I'm wondering, are you all aware of any existing programs that help to address these issues? Because I imagine like your research is striking because it's not my field. So I'm like, oh, some of the same issues that I wrangle with around equity and justice issues in other areas actually pertain here. Are there already initiatives designed to help address some of what you found? Are you aware of programs like that?
Yeah, I noticed my co-author is also here. So if she wants to comment anything, I'll let her like put her hands up. But so short and sweet, no. But so far, I've been working on similar things, looking at leadership and board of directors and in farm credit system, and I've been talking to them in terms of understanding how they reach to minority farmers. And so there has been an attempt on their end. They have an attempt both in hiring when they are in a county that has a greater number of African-American farmers or Native American farmers. They do try to hire people that are of a similar background. And so there is an attempt in that sense. They reach out also to groups, so groups of farmers to try to have built this relationship. But apart from that, I'll be honest, I don't know of any other programs.
I see Casey Jackson has a question.
Yes, I was actually, my mind was thinking along the same lines as Amina Anderson's. I was really struck by this issue of access and being sort of in a network and not. But since Dr. Anderson already asked that question, I guess my follow-up was, I'm really interested in how you sort of position yourself as a scholar and sort of like what you find important about this research and how it kind of fits within the goals of your scholarship as a whole.
Well, so I thought I've learned a lot through this research. It's interesting, like, so I've been in the US like nine years, and it's interesting when you start working on this, how much is behind the scenes, if I can say that. So for instance, a program that is like it's not meant to be racist, it's meant to be for everyone. And it doesn't matter if you're credit worthy or not, because it is backed up by the government. So like it should be accessible to everyone, but how much your background matters, so like not having that previous relationship with the bank or with another type of lender, or maybe you had already some bad experiences with certain lenders and you don't trust them, how much that can have an effect on your access to the program. And so we did have, we've been working, we have another paper on this, and we had reviewers come back and say, well, explain a little bit in terms of, like systemic racism. And we're kind of like, oh, wow, we need to now make sure we learn a little bit more about this. And I reach out to a friend who's a sociologist, associate professor, and so she could help me out in this area. But it's very interesting at how much that plays a role, and the effect and things that, if you're not aware, it doesn't come to mind until you start researching more on it, and the potential spillover effects, if you can say so, like later on, how that can affect.
Mhm. Yeah, the whole time I was listening to your presentation, particularly as you start to discuss the findings, I'm over here thinking about the application of CRT to your research. And I'm thinking about, in particular, Ibram Kendi, in his book that was so popular, New York Times bestseller, How to Be Anti-Racist. I was thinking about what I have found useful about his definition of racism. Irrespective of intentionality, the attention is drawn to the patterns that are created by certain systems, whether you intend for them to be not. He focuses on the patterns that are produced by given systems. So that's what I find most useful. So if you look at these systems, as you say, are not intended to be racist, if the patterns that they create are in fact racist and are creating inequities that you are able to observe by race, then you say, oh, that's actually a racist system. It has nothing to do with anyone's intention necessarily. I mean, people could debate that, but the fact of the matter is we pay attention to the patterns. So when you see the patterns and the patterns are racially inequitable, then we say, well, that's a racist system. It doesn't necessarily point to a particular person, but it does mean that we need to do a critical analysis of the components that lead to a system where we have advantages in terms of borrower-lender relationships that tend to fall on the side of those people who are white, and the people who are in the institutions who are probably also white, who are running these programs. And then it gives us a place to start to begin to sort of think about how do we reimagine or how do we transform those organizations so that they produce more equitable results. Right. So that's what energized me about your presentation, which I thought was wonderful. And yeah, thank you for that.
Can I add on to that?
For sure.
But I'm going to ask you to repeat it.
Yes.
Amina and I are in the same room. So hi, Dr. Sant'Anna. My name is Maya Holmes. I'm a faculty member in the Department of Public Administration. So for me, when I see the policy, this is a great example of policy implementation, right? And this is what public administrators love. And I just want to commend you on sort of the questions that you and your authors are your colleagues are asking, because I think it's really critical questions. And it matters in terms of not just for this policy, but future policies, right? So building on what Amina said, just another thought process in this was that when we think about the PPP program, you highlighted that it was intended to try to remove as many administrative barriers as possible and potential, like with the credit, not asking for credit worthy and so on. And potentially, sometimes credit worthiness could also be inhibiting in terms of some of that bias, as well, right? So and that might be built into it. But what I do think is interesting is that what you're raising too is that, and I keep coming back to this relationship, it's the kind of the opposite of administrative burdens, is the lack of a relationship connection, and so maybe that's part of the story too, is those relationship connections or building those administrative connections. So I'm going to send you a link separately that talks about administrative burdens. It's it's becoming a big deal right now in just broadly in policy making. But that might be helping you all sort of think about this as well in various ways. So, but I think it's just fantastic and relevant, and in terms of the type of research that you all are doing. So
Thank you.
thank you.
Yes, thank you so much. Does anyone else have any questions for our scholar? Okay. Well, I thought you were amazing. I thank you so much for participating in our inaugural Faculty Talk series for 2023. Thank you so much. I would encourage those who were able to participate to fill out the feedback form. These are useful for our files, as we know. And I'll also send you a list of participants, so you have that as well, Dr. Sant'Anna. Thank
Oh,
you so
awesome. Thank you. Yeah,
yeah,
thank you for
so much.
having me and the opportunity.
Absolutely. And please, spread the word as we have to prepare our talks for next year. So we'll be looking to feature other FJN members. So we appreciate you. Everyone who came on board, thank you so much for this evening. And we will look forward to our next talk, which is going to be given by Dr. Joseph Jones on March the 9th. He has a very interesting topic, which Jacob, can you read that his topic off for me? Do you have it handy?
Yeah, I think I might actually. Hold on.
Okay.
So it says, Dr. Jones says, this project examines the Black press and its role fulfilling the promises of a society that claimed all men were created equal. I will show how the Black press helped realize democratic ideals by countering hegemony and being characterized by care. After briefly addressing the transformation of the Black press in the digital age, I'll conclude with temporary examples and discuss the current state of this Black media ethic of care.
Awesome. Thank you so much, Jacob. That was right on the spot. I appreciate that, you doing that. All right, everyone. Thank you so much. We hope to see you March 9th for another talk, and then check out our series and website, the Faculty Justice Network website, for other events. Thank you. Have a good evening.